The multi-level tax complexity is finally coming to an end in a highly complex country like India. Yes, after years of paper, scissors and stones, the goods and services tax finally wins over. That's one single tax for all the good services across the country. Finally, India gets freedom from a highly complicated, multi-level and highly sophisticated tax structure. Here are a few ways on how GST is going to impact the auto sector. Pay less to buy a car. Once GST gets implemented all round, the excise duty, which is a central affair, and sales tax, road tax and registration tax, a state affair, all gets combined into one. Yes, that's GST. Assuming a tax range of 18 to 20%, the prices of automobiles is likely to decrease, thus creating a larger demand and taking India forward to its target of the largest automobile market in the world. What makes us to scratch our heads is a could-be adaptation of a dual tax structure for different segments of cars. Overall economic activities will be at a boost, and auto sector's contribution to the country's GDP is likely to reach its all-time high. A singular tax structure is likely to make both the auto sector and the Indian GDP stronger and merrier. Impact of tax cascading goes away, thus reducing the manufacturing cost. All taxes on input paid will be offset with the output liability of GST. As GST is likely to absorb the current levied state, central and local body taxes, the movement of automobiles is likely to be smoother and less expensive. Currently, all states have levied many indirect taxes on the movement of goods like entry tax, purchase tax, state VAT and surcharges. So all trucks carrying new bikes and cars from the factory to the dealerships have to pass through multiple checkpoints to pay taxes to the states. GST is charged where the goods are consumed and not where they are produced. So, a single tax that is applied only at a place to buy the car is going to make things a cakewalk. As per CM, after introduction of GST, no additional tax should be introduced. A provision is to be made in the law for the same. Any change, if required in future, should be done through modifying the rate of taxation under the GST regime and not through any additional taxes.